In his book, Rich Dad Poor Dad, Robert Kiyosaki lays down the four main sources of income, explains how they function, and explains why the affluent continue to become wealthier. Each category is comprised of three components: one's mental attitude, their monetary flow, and their tax situation. In the E quadrant, the emphasis is placed on the stability of one's income as well as the advantages provided by their job, such as pension plan, medical insurance, and a regular paycheck. When a person is in this quadrant, they often do not have a great deal of influence over how much money they will be paid, which makes it more difficult for the employee to increase their own income. There are just a few ways that they may boost their income, such as going back to school and finding a job that pays higher, and the tax process is quite simple. Taxes are deducted from an employee's pay before they get their paycheck, and only after taxes have been deducted does the employer receive their pay. Taxes at the federal, state, and municipal levels, as well as Social Security contributions, must be paid by individuals in this income bracket who make a significant amount of money. When a person chooses to give self-employment or a small company a go in order to generate money on their own, they fall into the S quadrant, often known as the self-employed or small business category. Independence is the operative term to describe the S quadrant, since the method of making money in this category is still transferring one's time for monetary compensation. However, this time is not spent working at a traditional job. Self-employed people take on more risk than those in the first group by exchanging their time for a chance to make money. People are nevertheless required to pay income tax, state tax, and municipal tax. Despite the fact that these types of taxes have a little more leeway than other type of taxes, because they fulfill the roles of both employer and worker, individuals who are self-employed wind up contributing a great proportion of their income to the Medicare and Social Security systems. In this category, the large quadrant refers to significant commercial endeavors, and the rules of the game are a little bit different than in the preceding category. A type of companies known as the B quadrant is comprised of those who make use of leverage in order to raise the amount of money they bring in. OPT, which stands for Others People Time, and OPM, which stands for Other People Money, are the two primary kinds of leverage that are utilized in this category. OPT and OPM are used to optimize the outcomes that a firm achieves, while OPM is used to efficiently manage the time and resources of other individuals in order to maximize cash flow for the company and its investors. Because of this, the company has become an asset that generates a steady stream of income, and as a result, many of the owners have made the decision to either maintain it or pay someone else to operate it. In addition, firms that are self-sufficient in their operations and generate continuous revenue are assets that investors find particularly appealing. When it comes to taxes, the B quadrant's larger investors are subject to a different set of rules than those in the first two groups. Instead of paying their employees a hefty wage, corporations pay themselves the bulk of their earnings and dividends. The maximum tax rate for corporations is 21%. Businesses also have the flexibility to shift their locations in order to take advantage of more favorable tax regulations, such as Puerto Rico's corporation tax rate of 4% in the absence of an income tax, capital gains tax, or dividend income tax. This is just one example of how companies may migrate in order to take advantage of more favorable tax rules. Businesses may use debt to spend more money on developing their company than actually makes them profits. Roll over existing debts into new obligations and take advantage of write-offs and credits that are exclusively accessible to firms and organizations. Other ways that companies might utilize debt, including rolling over all debts into new debts. The instance in which Donald Trump buried his first wife at one of his golf courses is widely considered to be among the most absurd examples of creative use of the tax rules. Because of this, the golf course is classified as a cemetery, and under the tax legislation in New Jersey, cemetery land is free from all taxes and assessments. This allows the golf course to avoid paying taxes. Trump successfully removed 3 separate tax categories in a trifecta. The I quadrant, which stands for investor, is the area of the chart where monetary resources are converted into tangible assets. Capital is the cost of entry to become an investor. The philosophy of the I quadrant is one of divorcing time from money and acquiring assets that give income without requiring the investor's time to maintain them. Those who fall into this group see the accumulation and protection of money as their primary objectives in life. Cash flow, appreciation, and taxes are the 3 main wealth builders that investors seek for. The I quadrant enjoys a number of tax advantages that are not available in the other 3 quadrants. One of these advantages is the potential to amass a significant amount of wealth with little or no impact on their tax liability. In the realm of real estate, several examples of this kind of activity may be seen via various real estate transactions. By the utilization of the 1031 exchange, investors are able to sell one asset at a profit, defer their taxes on the profit, and then use the money to acquire other property without having to pay any taxes on the purchase of the additional property. Investors who don't want to sell their assets may borrow money and use those assets as collateral to purchase other assets. This provides investors with the opportunity to vastly increase their net worth in a manner that is almost entirely exempt from taxation. According to Robert Kiyosaki, the I quadrant is like to a playground for affluent people, and the skill of being able to invest is what ultimately leads to a person's success in accumulating money. We appreciate you taking the time to view this video on how to become a successful investor by learning to control your emotions.